Welcome to Bitcoin Escape Plan. Is the Bitcoin bottom in? We're going to be looking for evidence for that in today's video. As always, I like to start off these videos with the 4-hour chart analysis, just so we have a clear picture of what's going to happen in the next couple hours for Bitcoin. Then we'll kind of take it back to the monthly, weekly, daily, just to get an accurate health check on how the price is doing at the moment. If you enjoyed this type of analysis, you can subscribe here on YouTube, as well as go to bitcoinescapeplan.com. Every Monday, I release a long-form email where I give pretty much similar to this video. I give details on key levels on each time frame that I am surprised sometimes how accurate I'm able to be a week out ahead of time. So go check it out, bitcoinescapeplan.com. Get the key levels in your email before they arrive on the charts. Let's get into the video. So on the 4-hour chart, there's a couple key things we want to pay attention to. The major one being this anchored VWAP level that I talk about all the time that I have set from 2011 to now. I don't use a more recent one. I just let it stay at the original positioning in the chart. We broke through it last week, and we are currently retesting it. Currently showing strength. We wicked down to it. These are not this is a level that you would have to draw on the chart. This is not one that you can see from weekly or monthly closes or anything like that. This is a tool that you would have to actually set. I did go over it in yesterday's video or Monday's video, so you can check it out there. The most important thing for us to pay attention to now is, does it continue to consolidate closer and closer to that anchor VWAP level, which is currently sitting at 65.7K? Do we have another breakdown lower? And this is the real point of contention, is we need to see strength at about 63 to 64K as a form of support. If we do not see support there is a strong case that we are going to drop significantly lower towards 50, which hopefully we don't see until later in the year. It would be nice to get one more pump, but I think as time continues to drag on, we need to be more accepting of the fact that this breakdown is going to be more violent than we expected it to be. So in terms of whether or not the bottom is in, what we're looking for now is, in the short term, we may see another push back to the 4-hour SMA. That's here at 68.8K at the moment. It is still dropping lower. This candle did just form, so we need to wait to see if we can get some momentum into the new day. The daily candle just closed as well. We'll go over that in a little bit. But unless we're able to get yesterday's high, or Wednesday's high rather, was 68.3. So we're going to want to see some momentum above there in order to get a sincere push higher. And the psychological levels that we're paying attention to there are 69K and 73.8K, being the end of 2021 peak, as well as the March of 2024 peak. Those are both serve as psychological levels more so than specific technical targets. They're wicks, so wicks are never going to be as important to us as a monthly or weekly closing price, but still very important. As you can see here, we went down to 59.9, which is very close. If we look at the monthly chart, very close to this guy here, and we actually, this is the original, so this is the April-March closing candles in 2021, was right at 58.85, literally, and the price went all the way down to, again, 59.9, so only $1,000 higher than that, basically. So we use those levels just to kind of get a health and temperature check on the market at the moment. So it's not good when the price does go down that far, but it is a bit of a health signal to see that it didn't break below that point, that there was some support found once we got in that. And as you can see now, we're kind of in the middle of the channel at the moment. There is technically, right where the price is, there's technically another close. I don't have this one drawn. Let's see, I guess I can draw it. I just did this wrong again. I tried to do it and it didn't work before. Alt-H. All right, well, I'm going to move on with my life. It's not that important. But that level in particular, I would say, is the middle of this range, essentially. But really above 63 to 64K is what we really want to pay attention to here. This is kind of like no man's land, like consolidation. We've spent a bunch of time here in 2024. We did not spend any time there at all in 2021. So it's not really like on the anchor volume profile, as you can see over here, we're very thin between about 60 or 76 and about 69. Very thin, huge gap to be filled there that, that the market is not currently showing us with strength that it wants to fill. And then below that is even worse, very, very thin in those levels. And this is all the ETF buyers, or technically that is January, February, March of 2024. So a lot of these people will start to be out of profit once we start to drop below those levels. And they will fight for that. They're not going to be overly stoked for that to happen. So in general, I know that some of the other markets are showing some weakness now too. It is still my opinion that gold is going to continue to rip until stocks and real estate have bottomed. So a period of several years that gold is going to continue to go up. It's not just me that says that. It's Ray Dalio who says that. He's obviously much smarter and more successful than I am. So I'm going to take his word for it. But I also, just looking at that chart, that's what I see when I look at that chart. So for Bitcoin, I really just see the same thing that I've been talking about. There is a possibility that we're not going to get this higher rise. So I've talked about this for a couple months now, where originally I was hoping that the top of the range that we could touch was 106.8K. The longer that we go on into this cycle, the more I realize, okay, you know what? I don't think we're actually going to break above 100K again this year. Or if we do, it'll be temporary. And then that would be the tipping point, is that 106.8K. I've been saying that since pretty much November, December. Now it's looking like even the 96K pivot, which is kind of like my fallback to that, the reaction to 96K is going to tell us whether or not we have the gas to get to 106.8. Now it's starting to look like we don't even have the gas to break above 96. 96 is actually going to form as the resistance level that really starts the proper bear market. You think that we're in the bear market already. We're not. It hasn't really started yet. The 50% retracement is the start of the bear market, not the end of it. So what we're looking for now, again, is do we have strength above 64? On a monthly time frame, ideally above 76.2. And above 76.2, I would say that this is the original thesis is still in play, that we see a rise into the end of February and the beginning of March. That would be interpreted as a very bearish or bullish signal, rather, if we can get above 76.2K. So again, we would need to bypass 69K and 73.8K as psychological levels before there. And then I believe the lower term time frame target is 70.2K. So currently we are below that. There is some pressure for us to stay below that. And as you can see on the weekly, we are currently right in between those two Fibonacci pivots, which is the same for the monthly. We just have more time for it to actually resolve itself here. So the week is not over. This week so far, we look to be kind of range bound. We do look like we're giving back and trying to see, do we wick past 64? That's going to be a very important thing for us to pay attention to in the short term. Again, there's a bunch of levels here from previous closes. So technically, previous buyers could step in at any time and, want to put more money into the markets. However, it's not really looking like that. The general shape of this, this is still opening up to the downside pretty aggressively. There's no rounding of the Bollinger Band at the moment. It just looks like it's going to continue to drop. Pretty much same thing across every time frame. On the daily, we did just give up the 70.2K pivot that I mentioned. So we did not see strength up towards 75.5. And really, it looks like we got rejected. This is 72.1. It looks like we got rejected off of that 73.8K level that I mentioned. Or rather, we rejected an attempt toward it. So this is what we have to remember with price, is it's somewhere between the money that is actually flowing right now and the story of the past. That's kind of like what the price actually has to experience and go through, is we've now seen the 50% drop. We need to see, okay, do we have enough strength for a bounce and recovery from this, or do we just accept this is the beginning of the bear market and now we will continue to break down to the downside? And I would say that that really depends on if February ends the month above. Again, on the higher term time frames, it's about 76.2K. This right here is reading it as 75.5. And where is the SMA at the moment on the daily? It's at 77. So I don't know that we're going to see a touch of 77. Still fairly early in the month. I guess whatever, like a third of the way through the month. So it's still possible. There's still plenty of time for us to see an equivalent candle here up to there. But right now it's just not looking good. It's really looking like if we were going to see a retest of 96, it would have been like we would have held strength at 80. Whereas now, with us touching all the way down to 59.9, it's not really looking good for a run to 100 and possibly even 80. Like 80 may actually form as resistance here if we can't get a significant enough amount of volume to return to the market. And I don't know where that money is coming from, personally. The Stablecoin Act has taken them forever to decide what they actually want to do with it. I think that's by design for money to continue to bleed out of the market. A ton of money is in the prediction markets now. It's not in altcoins anymore. I went over it in the yen carry trade video. There was dramatically less liquidity this cycle for altcoins in the first place. A lot of the volume that we do see is in fucking meme coins and things like that on Solana that exist for 72 hours in some cases or less. So it's just the market is over levered, and there's nothing. Like, I'm starting to see crazy like bonuses and deals for exchanges and stuff like that. And that happened right before they all went bust in 2022. So in general, I don't see anything different than what normally happens during this part of the cycle, which is that the prices continue to trend down, and you either take advantage of that by shorting the market, which you now have so many different options how to do that. The Coinbase futures contracts, you have IBIT, you have, if you don't live in the US, you can just long and short it on most exchanges, being able to do perpetuals or futures contracts. So there's just a lot of options to be able to still take advantage of the price dropping, as well as, this shouldn't even have to be said, but anytime we are below the monthly or the weekly SMA is a time to accumulate. I repeat that all the time on this channel. Anytime it's below that is a good time historically for the price, even if you have to be a little bit patient. When you buy at the top, you got to be patient for a period of 5 years before the price is guaranteed to stay above that level. And it's a little bit less time when you're able to buy it in these downtrends. Like if we were to have bought this guy here, this was 32K in January of 2022. You would have had to wait until November of 2023. So pretty close to 2 years. So we could assume something similar for here. If we were to buy right now, we would need to wait a period of 2 years before it's guaranteed for the price to be long gone past that. So what does that mean? That means that we would expect the price to continue to break down to wherever it's going to break down. For me personally, that's probably somewhere over here. This is 45K. This is 39K, 38.5. That's just based on these guys. There's a lot. We spent a decent amount of time in 2021 at those levels, and that's just barely below the wicks for the IBIT trend. That's about 49.6K right there. And that's really what we're going to need to see is like if we can get this monthly candle to close above 71.4, that's a great sign that we have enough potential for another bounce towards the monthly SMA. I do not think that we are at the moment going to get a break above the monthly SMA. So the targets that I had said previously about 106.8K and 96K are looking less and less likely as time goes on. We may have to accept that so that resistance ceiling is actually 80K. Which sucks. I hate to like have to keep changing my opinion on that and keep sending it lower, but I think just the reality is we are showing a more significant breakdown quicker. Like this is April where we see, or sorry, May. May is where we see where we are now. Or really, I mean, this looks more like June at this time. Because here in 2022, we have April as the final break. For us, that was December. And then January closes way below. May over here closes way below. It wicks. It does not recover that very much. And then it continues to break down. So there is a significant possibility that if February cannot get back to above this wick here, let alone above the candle open itself, which the candle open itself is 79.3. And there you go. If it can't get to that point, that will be rejected as a failure of 80K, which is becoming a very important level, I think. For me, it's not, I don't think it's impossible for it to break above 80K, but it is looking like it's impossible for it to break above 96. 96 is like the highest that I could believe it's going to go in this initial run, which will be viewed as a lower high because we just ran to 98. So that's going to be like interpreted as a failure on the chart, and it's going to push the price down lower again. So what we're really looking for at the moment is just, can February stay above 64K? Cool. That's great. Can it close above 69 to 73.8K? That's really going to be where we're actually in possible bull territory. And I hesitate to even say that because, again, I'm talking about short term, like very, very short term, between now and March, essentially, of us getting a bullish move towards 76.2. And if we can close above that, cool. We get one more retest of 80 and possibly higher. But at the moment, that's not what the chart is showing. The chart is showing lower. So what is the next level we should be paying attention to besides that? I mean, lower here, we can look at, it's about 54.7K. This range is pretty strong here at 58.6K. So there is a little bit of support there, not a lot. These are weekly, not monthly levels. We can take a look at, so I have very few levels that are drawn below that. Technically, that one would serve as a level there, that 55.1, but it's not a good territory for us to be in. Like, that's not what we want to be seeing on the chart right now, is like continuing to flirt with lower lows. The absolute bottom for the year, like, to me, there's no way that it's not below this pivot, or this wick rather, which is at 49.6. That's going to put pressure on the IBIT holders, and it's not a true bear market until everybody is in pain. So I really think that we are going to see a break below those levels, even if it's not for that long. I do think it's more likely that we see strength above the 64K pivot, which will be interpreted as strength above the 50% retracement mark at 63K. That will give us enough momentum to push past 69K and 73.8K. And then again, it's just a matter of whether we can close the month above 76.2K. We have multiple weekly closes that, that we can do that with. We still have whatever, like 2-3 weeks left of February. Two more, I guess, besides this one now. So if this one closes, at least towards the middle of this candle, this is at 73.2. So right, very close to that 73.8K mark. That's what we're going to need to see, is if we can get strength above those guys. This is 71.9. Pretty much anywhere in there is better than like currently we're in no man's land. Currently we're in, like, there's nothing really preventing us from the floor like dropping out below and continuing lower, because again, it's like just the 50% psychological mark that is actually protecting us at these levels, and that didn't hold. Like, it did not hold. Like here in 2022, when we dropped down to those levels in January, we were able to, this is where I'm taking this analysis from, is we were able to chop back up for the rest of February, which again, this is not really what it looks like right now. It looks uglier right now. That looks way uglier than what we were dealing with in 2022. It looks like here in 2022. So we may have to accept that we've already seen this failure. The weekly SMA is still dropping below the 96K pivot. That's why I'm saying it really looks to me like 96K is going to form as resistance if we're even able to get back there. That was my original base case, was that we're going to see strength here, strength above 76.2, and by the time that we get there, which I would imagine again will be the end of February, this SMA is going to be pulled down even lower. It's currently at 94K. I would imagine the SMA is going to be down here, 86.4 or something like that, by the time we actually interact with it. And again, that's predicated upon us showing enough strength to get to 80 in the first place, which may not happen. We're actually pretty thin between about 87 and 80 itself. So like the only volume that we have for that is the drops in March of 2025. So literally you've got to hope that the people who bought en masse in March, April of last year really want to hold this level, and that they're not like, mostly short-term holders who were new to the price at that time and now they're panicking because they're finally in loss. So again, the bear market isn't over until everyone is in pain, and it's not really like, it won't affect anyone whose cost basis is $8,000 per Bitcoin or even $20,000 per Bitcoin. I'm seeing a lot of people talk about how it's going to go to 18K now, and like, there's no basis for that. It doesn't make any sense at all on the chart for that to be the case. I do genuinely believe that we can see as low as about 35-ish. This is 31.5. Technically possible. I don't know that I believe that personally. The way that I like to look at this is from here. So these are the closing candles right here for 2018. That's closed at right around 13.9K. The wick at that time, of course, 19.6. So where does the price actually go to? It goes to in between where the wick is and the highest candle close of that time period. So that provides the range of where the price is actually going to drop to. Again, assuming that Bitcoin continues to behave the same way, which we have no guarantee that that is the case, but it does seem to rhyme pretty well for that. What that would mean for us now is the price would drop below that 69K because that's the wick, but it would stay above. That would be this guy. So for us, we can assume it's either one of these. This is 61.5K. This is 58.7K. Since we just touched it, I would assume that this is probably going to break this time and that we're actually going to see more volatility to the downside, as opposed to this one could be interpreted as a fairly bullish snap to the upside as well as a recovery there. So I do think that once we get to about 50, a lot of that's going to get eaten up. So there's a good possibility that we don't really go much lower than this is 46K, 46.8K. There's a good possibility that right around there, buyers start to step in meaningfully. Maybe we see some of the rich billionaires come back into the market at force at those levels. No one can really say. But regardless, it doesn't look to me like it's going to match that same trend as that previous cycle, where the bottom held at somewhere between the wick and the candle close, because we're too close to it already. We're way too close to it. So this again is 69K. Top of the wick, or top of the candle rather, is 47.9. Oh no, that's the high. What am I looking at? 61.4. My apologies. So we already broke through that now. So you would have to interpret this as the end of the bear market, essentially, for that same trend to hold true, which to me just doesn't make any sense. So I think what we're looking for in the short term is, can we show some strength at the levels I have mentioned now multiple times in the video, specifically 64K and 76.2K. If we can get a couple weekly closes above those levels, we have one more attempt back towards the monthly SMA, but we have to accept that it may be more likely that we've already given it up and that we are not going to get back to it. This is the only example I can see on the chart that is possibly to the contrary, but even then, that's still, it broke down into the end of the year. The recovery was pretty quick. It's about 6 months for it to recover from the proper low. So that could be the case where we see a low put in within the next month or two, and then we just consolidate there for a couple months, and then it jumps up out of it. That would put us at whatever, like August, I believe, being when we would break back out of these levels. But I don't know if I believe that. I think that it benefits the big banks for Bitcoin to be in more pain so that their customers buy more of it when the stablecoins go live. It's way more attractive for you to buy a shitload of Bitcoin at 35K than it is at 135K. So that is the general, my opinion on this channel, is that it will continue to bleed because it's better for the people who actually have money. And unfortunately, that's reality. The markets are going to bend to the people who are able to control it. Like I saw something about how JP Morgan Chase paid like $789 million or something like that in fines for essentially manipulating the commodities markets. And for them, they don't give a shit. They get to control all of global finance. Why wouldn't they pay $789 million worth of fines? They don't care. What they get is control of the financial markets. That's worth $789 million when they custody trillions of dollars. So to think that this is not easily manipulatable is delusional. Anybody could choose at any moment of the day to put $50 billion in Bitcoin. Nothing is preventing them other than whether or not there's enough to sell. And if they do that, if they put in a buy order for that, it's going to start raising the price. One, just because it'll be a crazy story. No one's ever put in a buy for that amount that I'm aware of, unless the ETFs are doing higher volume than that, but I don't believe so. I think that it's still significantly less than that. But yeah, that's what we need to see, is we need to see real strength from the ETF buyer crowd in general. And we need to hope that those people are not jumping ship and going towards, gold, and even just stocks in general are doing considerably better than Bitcoin is now. To end the video, I'll take a look at some other assets. So gold is still chilling. Like I do, it had its drop down already, and it's already long and strong from that. Like it's not really showing any signs of weakness. And I don't personally think that it's going to. Stock market slowing down a little bit, but kind of the same case. It's taking longer and it's less violent than gold is at the moment. But it's not really, on the monthly, look at that. It's not really showing evidence of slowing down yet. It does seem like SPY will chop to the downside a week or two before gold will. So that is important if we're looking for the next drawdown. I would expect it on SPY first before we see it on gold. But both of them, while these are at all-time highs, why would you be adding to Bitcoin? It just doesn't make sense. Nobody's going to do that. Unless you're a crazy person and you follow this channel, because then these are great times to buy it. You just got to be patient. So Ethereum, same thing. This chart looks terrible. Oh my God. Damn, that looks bad. I never look at Ethereum on this channel because I don't need to make you feel sad all the time, but it looks like there's very little that's preventing us from going to the lows of 2023. This is something that I want people to understand this. I'm trying to move towards just focusing more on Bitcoin than on talking about other assets on this channel, other than when it comes up. like now. But like, this is not an asset that you should be investing in. This is an asset that you can trade, certainly. If you are someone who has a good track record with trading memes or NFTs, you require a stack of Ethereum in order to be able to do that. If you are not using DeFi, or if you're not like really into Web3, you don't have to hold Ethereum. You don't have to have a bag of like the top 5 altcoins or whatever. It's not actually benefiting your portfolio. It's certainly not benefiting the Satoshi value of your portfolio, but it's also hurting the USD value of your portfolio. So it just like doesn't, across the board, there's very little reason to hold these things through cycles instead of taking your profits when they're available and getting the hell out of there. So let's take a look at Total 2. Total 2 looks a little bit healthier than Ethereum, but not really by much. It is my theory that we're going to see stablecoins in general just explode towards the end of this year. And that'll start to resume some liquidity for the altcoins, but I don't think that we're going to see 2021 anytime soon for the altcoins. I mean, this does, to me, again, this looks healthier than the Ethereum chart. So the overall trend for money flowing in, I think this floor will probably be held. This is about 433 billion. About 600 billion roughly. I would imagine that floor will be held. We're currently at 900 and, I mean, Jesus, we still have a long way to go. So there really is nothing preventing us from bleeding another $500 billion worth of crypto. That's insane. So you need to be prepared for the possibility that Bitcoin drops sooner than later, and that we do rip towards that 44K pivot. If we do that, we're going to stop in between on the way. There is significant support. This is 62.7. That is showing some signs of support now. That's below 64K. So there's some evidence from specifically 2024, which are going to be the most recent buyers. So those are going to be people who like really don't want to see their money cut in half. They're going to be a little bit more sensitive to price than people who bought in the lows of 2022. That, for me, that's all I'm focused on. That's when the majority of my most recent purchases were around there and into 2023. And then right now, I'm not currently DCAing heavy. I'm waiting to kind of see where this resolves, and then I will resume DCAing probably by the summer, I would imagine. But I'm mostly just focused on my credit leverage strategy this year. I really understand it better now than I did when I first did it. Having to write the book about it really helped me like formalize it and make it just more clear how you can actually use it, and more importantly, when is the proper time to use it. So that's what I'm focused on at the moment, is just kind of seeing, do we continue to break down? Are we able to show strength above 76.2 to give us one more pump higher? I am hesitant to add to shorts here. I would want a more clear rejection level. Like, I would feel like 80K is a good potential one, where you have a decent risk to reward on that. I still think that the highest that it could possibly rise is 96. I don't think it's going to do that. And we really don't look like the time in the cycle where it's going to get that retracement. It does not look good at the moment. That's what we've been looking for, though, in March of 2022. And we didn't really see the same thing in 28. Well, no, actually, it looks like we did. 2018 is pretty much the same thing. We're just tighter on the SMA at that time. So same thing, same drop into the beginning of February, and then a rise into the end of it, and a failure by the beginning of March. And then 2022, pretty much the same thing. Failure into December, failure into January, a drop down. We were a little bit higher. We actually rose into February before dropping. But same thing, a rise into March, and then a failure. So that is still the baseline theory, is that we're going to see a slight recovery from here. It does not look like that's going to be 96K. Looks like 96K is going to be formed as resistance. So we're not going to get to that point. It will be somewhere lower than that we actually get to. 94K is currently where the weekly SMA is at. And as we talked about earlier in the video, even if we can break that, it's going to form as resistance above it. So that's what I would be keeping an eye on at. That's what I would be keeping an eye out for in the next couple of days, is can we show strength above 76.2K for the weekly close? If we can, cool. Gives us permission for a continued relief rally into the end of February and into early March. But it is still my opinion that after that, we're going to drop off a cliff. So is the Bitcoin bottom in? It's too early to say. We really want to see strength above about 64K. If we can see strength above about 64K, then yes. The bottom is already in at 59.5 for the moment until we see the other extension of that relief rally. And then we're going to cut right through that floor. It's going to be terrible. It's going to be very sad. Can't wait to see it. And then I'll probably start loading up not very long after that, because really, once we're at those levels at like 40, 50K, it's my baseline expectation that in 2029, the price is going to be at over 200,000 at the peak. And then when it does its 50% retracement from there, it's going to go to 100K. It's going to barely drop below 100K, if it even does. And that really, the only way that it does is if it gets like more volatile to the downside and less volatile to the upside. So it's basically, Bitcoin's going to get increasingly boring, I think, at prices around 100K, unless we're really able to like start seeing dramatic upside. And it is quite possible with the stable coins that will occur, because again, we've shifted, I've talked about this in a million videos, we've shifted the buyers of US debt from foreign countries to foreign borrowers in general. So anyone from the country can now participate in a form of US debt exchange, versus we used to have to do it on the country level, and now we're kind of taking it into our own hands. So there's a real possibility that trillions and trillions of dollars flows into this asset class. I just think it's going to take time. And in the short term, that time will be experienced as pain. So that's what I'll be looking for at the moment. I will post another video on Friday, just kind of updating this trend. Hopefully we're closer to 76.2K by Friday, and we don't see a continued breakdown below 64K over the rest of the week. If we go slightly below 64, it's not the end of the world, but we really would like a weekly close above that if we're going to see strength. Otherwise, you can anticipate that the price will continue breaking down. All right, Bitcoin Escape Plan. Hope you have a great, wonderful day. I'll see you on Friday.